its organization, why it will be important to you as a recipient of federal grant funds. And in terms of understanding this material that we're going to talk about next, which is essentially your stellar financial management of grant funds. And since most of the GDOT people are out of the room, I can say this. I've done work with 42 state DOTs in my career, and I can tell you, if I got the program manager sat in the corner, he or she could tell me who their good grantees, who the problem grantees were, lickety-split, right off the top of their head. And I guarantee you, the people in the good category are those that get their invoices in on time, and their invoices are always accurate. And even with the most objective committee structure in place, the human factor in making discretionary grant decisions, which is what the capital grant program is, which is what 5311 and 5310 are, will be influenced by your perceived track record. And so I recommend to anybody, especially at the local level who has to deal with the state DOT, is the number one thing you can do to enhance your viability to get more grant funds is to go do a good job on the invoicing process of the funds you have. It's not written in any state management plan, it's not written in any FTA rule book, it's not written in any GDOT administrative procedure, but I guarantee you that's the best thing you can do in terms of seeking grant funding. And there's all kinds of benefits that we can talk about with GDOT in the room. To the extent that your invoices are processed without error, they get processed faster. They don't get kicked back. Excuse me. Any organization, if you're a smaller nonprofit, boy, cash flow is king. You know, I get my invoices in by the 5th of following the close of the month. You know, I want to get paid that month. I can improve my cash flow by being accurate. There are times when you might make a mistake in an invoice and the state staff don't catch it and you get paid for it. And if 5311 is audited as a major program, it's a possibility that an audit, your independent auditor will catch it. And what happens when your independent auditor finds a mistake in your invoicing? What will they do? Anybody ever been subject to that before? Well, they will either say that you overbilled the state overpaid, or they will question the cost. Usually it'll be an overpayment claim. And they will do some quick math. And the auditors will then say, you owe the state X amount of dollars and you've got to cut a check. That is never a good thing to have happen to you. Audits under the Single Audit Act have always been a matter, with the exception of some Indian tribal organizations, a matter of public record. And there's nothing a hometown newspaper loves more than to get a hold of an organization-wide audit where you're forced to repay the state government because of your mistakes. That's front page news in my hometown newspaper. And that story lives on and on and on and on. It's not something you typically want to have happen to you. And more importantly, sometimes the magnitude of those audit exceptions are such, and I can tell you the federal government does not have a sense of humor about such paybacks, it can put you out of business. Someone during the break asked me where in North Carolina I was from. Wilmington area, New Hanover. I'm just north of Wilmington. We had a community action agency that served New Hanover County. They were running low on grant funds towards the close of fiscal year. The agency director told the staff to bill their time to Head Start. Head Start had already had this program under the microscope for other Head Start deficiencies. They came in to audit later that year, looked at the timesheets, looked at the Head Start hours. People bill on time the Head Start program, the days the Head Start program didn't even operate. Auditors questioned the cost. And at this point, those questioned costs amounted to about $228,000. Yet the feds don't have a sense of humor about such matters. You need to write us a check for $228K right now. Agency didn't have it. Agency had to close its doors. There was no community action program. In my county, no Head Start program because they went out of business on the spot. The agency folded. So those circumstances where people have to pay back the federal government, that's kind of a rare circumstance, to be perfectly honest. But when it does happen, it's real problematic. Years and years ago in South Carolina, an agency had transitioned from rural status to urbanized status, transitioned from the 5311 program to the 5307 program. And in those days, there was no provision in the urbanized formula program to use contract revenues as match. That agency didn't know that. They continued to use Medicaid contract revenues as match to the urban formula program, and essentially got caught about 8 years later. And by that time, the auditors had determined that they had undermatched FTA, and therefore FTA had overpaid them $1 million. And this transit authority in South Carolina was ordered to pay the $1 million immediately. They had to have the state senator, who had been in the Senate 50 years at that time and had some considerable clout, basically intervene to get FTA to waive the penalty, waive the payback. But they owed the feds, they owed FTA $1 million, couldn't pay it. That transit authority would have been out of business because the local governments weren't going to step up and front the transit authority. So it's a bad circumstance. It's career-ending for any of you that might wear the hat of general manager, executive director for those types of agencies. You simply don't want to be in that scenario, even if it's a nominal sum of money. It's a public relations black eye that no transit agency wants to have. And more importantly, again, why you may not think so, there are human beings at GDOT, there are human beings at FDA, and they have opinions about how efficient and proficient your organizations are. And for those of you who enjoy a good standing with your state DOT or with FDA, it's going to pay untold intangible benefits, particularly when it comes to discretionary grant funding. As I know as a grants manager, if I had a choice between agency A, agency B, I'd ask my staff who's a better grantee, whatever criteria we put in the application, I'd also consider who was going to give me more nightmares in the administration of that project. And that's just human nature. It will serve you well to reduce the level of scrutiny. FTA will tell you, when we were talking in the break as well, about how compliance-centric FTA is. And FTA publicly will periodically go on record and say our oversight review process is random. We try to get to you every 3 years on the triennial review process, and periodically in our drug and alcohol oversight audits or our financial management oversight audits. procurement system reviews. The fact of the matter is there's nothing random about that process whatsoever. They go after you because of known trouble spots in your program administration. And in some areas, RLS is currently doing 10 selective reviews in Illinois right now before the end of the grant closeout. We're doing those audits exclusively on the basis of past problems with those recipients. It's not random at all. And that's just the way grant oversight works. And so I'm going to be a pain in the where to about 5 agencies who I will be reviewing next week. And it's because they've got a spotty record of performance. You can enhance your own level of oversight by basically doing your jobs well on a day-to-day basis. The super circular killed one of what I thought more creative elements of talking about a boring subject such as cost allowability. Because in A87 there were 10 bullet points, and I refer to them as the 10 Commandments. Now under the super circular there are only 7 bullet points, and the 7 Commandments just doesn't have the same oomph to it that the 10 Commandments had. So I apologize for that. But these essentially are literally the commandments of cost allowability. And for you to charge any item to a grant, it first must meet each and every one of these 7 commandments. Number 1, the cost must be necessary and reasonable to the performance of the grant. It's got to conform to any limitation or exclusions set forth in federal cost principles, the super circular, federal laws, 49 United States Code, Chapter 53, terms and conditions of the federal award, your contract with GDOT. That just makes sense. If we didn't get grant monies for a bus, we can't take monies in that contract and go buy a bus. It's got to conform to the contract terms. It's got to be consistent with the policies and procedures that apply uniformly to both the federal awards and other activities of the non-federal agency. i.e., we don't keep 2 sets of books, one for our agency, one for the GDOT grant. It's all the same. Where Mark McGregor got in trouble and won himself 24 months in a federal penitentiary in order to pay restitution of $250,000, is he adopted different policies and procedures for one grant-related set of invoices from all other invoices and earned a place in the wall of shame. Costs must be accorded consistent treatment. If we're a nonprofit agency and in our billing other grants, our non-GDOT grants, we call the salary of the executive director an indirect cost. Then the salary of the salary of the executive director will be an indirect cost in our GDOT grants. Costs must be accorded consistent treatment. They must be determined in accordance with generally accepted accounting principles, or GAAP, primarily the subject matter for our independent auditors, but it generally means when we accrue expenses in accrual accounting, we apply accepted principles in the way we allocate those expenses. We can't double dip. If we've claimed a cost for reimbursement in our 5310 grant, we cannot claim the same cost for reimbursement in our 5311 grant. We can't double dip, either as a grant-related expense. The same is true as to the local match. If 5310 requires a $1 local match, and we've come up with that dollar through local appropriation, fundraising, or some other means, We cannot take that same dollar and use it again to match 5311. We cannot double dip. And the seventh commandment is all costs must be adequately documented. This is usually not a problem. This is a low-risk area, with the exception of personnel costs. We'll talk about those specifically. Talk a couple in depth a little bit more about the 7 commandments before we talk about specific items of cost. I've given you some definitions in these slides, and these will be useful for you. Reasonable and necessary. Those terms may mean different things to different people. I've given you the definition, as you can see, created by a team of attorneys at OMB. A cost of its nature and amount does not exceed that which would be incurred by a prudent person under similar circumstances. I.e., if everyone in this side of the room pays $4.99 for a ream of copy paper, you can't bill G. $12.99 for a ream of copy paper. That would exceed that incurred by all the prudent people on this side of the room. You violate the reasonable and necessary category. You may read this slide in detail and think there's an element of subjectivity to this. And you'd be absolutely right. I like to tell the story, and I'll pick on Illinois again. There was a transit system in the mid-1990s, not 1997, if memory serves me correctly, that had just been cited by the FTA administrator at the June CTA Expo as Rural Transit System of the Year. She operated a 9-county program at the time. They've since grown. And when she got back home from CTAA, she knew her efforts alone didn't win the system the award. It was a team effort. She wanted to recognize the team. She wanted, a little good publicity for the transit system, getting recognized by the FTA administrator as System of the Year is a pretty big honor. I want to recognize the team too. So she decides to have a little banquet, appreciation banquet for all the staff. She ordered flowers on top of the 8, when you go to a banquet dinner, you get a round table of 8 people sit at a table. She ordered flowers, served centerpieces to those rounds. $258 worth of flowers. And she had the appreciation banquet in August. And in 15th of September, she billed IDOT. And she billed some of the expenses associated with the driver appreciation dinner. One of the encounters in IDOT, going through that invoice, driver salary check, fuel check, floral centerpieces. Unusual. Goes to Super Circular, which was 87 at the time, reasonable and necessary was there. Unchecked. I'm not paying for them. IDOT had a rule. We can't pay October until September's paid. We can't pay November until October's paid. The transit manager and IDOT got into a little one-on-one here that lasted into the spring. By May, I was asked to intervene and mediate the dispute. By this time, the name of the transit system was the Rides Mass Transit District in Southern Illinois, had an outstanding balance due from IDOT just under $1 million. All because there was a line in the sand drawn over $258 worth of flowers because of a difference in interpretation of reasonable and necessary. What do you guys think of that? She's covering $1 million worth of reimbursable expenses out of her bank account while this dispute rages on. Would you guys do that? You're pretty emphatic.
I just pay for the flowers.
And if I were a manager, I'd be pretty emphatic about this too. I want $1 million and I want it now. And what's that, J.G. Wentworth? I want my money now. It's my money and I want it now. So here's the circumstance, and I'll only say this once during the entire 12-hour presentation, where you can throw the super circular out and listen to the words of Kenny Rogers. Folks, when it comes to reasonable and necessary, you've got to know when to hold them, know when to fold them. It's a matter of subjectivity, and if the state disagrees with you, and you've made your best case, then you fold. Settle the case, pay for the $258. One of the lessons that I do want to impart, though, the fact that any of you incur a cost that is either disputed at the invoice processing level or is questioned does not make you bad managers of federal grant funds. It just means those expenses shouldn't be charged to the federal grant award. The example I most frequently use is a lot of us have employees, drivers, who've worked for us for years. And as we all know, we don't have enough money to pay our drivers a decent salary. This guy might have worked for us for years and years and years, and even after all that tenure, still maybe making only $14 an hour. But he's a lawyer, good employee. Man's wife dies. We want to do the right thing as the employer. We might send flowers to the family. That makes us good employers in my judgment. But we don't bill that cost because it fails the reasonable and necessary criteria. We just pay for it either by collecting the hat from our fellow employees or we bill it out of agency general funds that are unrestricted. We're not subject to a reasonable and necessary test. Does it make us a bad grantee that we have unallowable expenses in the performance of our transit duties? We have to know when to drop that expense into the allowable bucket and bill it to GDOT, and when to drop it in the unallowable bucket and pay for it out of agency funds. That's the mission that we have. The more accurate we are in dropping allowable costs only into the GDOT bucket, i.e. coding those invoices properly, so that the accounting clerk, one, makes the correct entry right off the bat into the general ledger in our accounting software, the better off, the more accurate we are, and the more we enjoy those benefits that I showed 2 slides ago as to what benefits accrue to the agency that's more accurate in their financial management. Some other things to consider, though, for those of you who maybe like to tussle with GDOT every now and then, and there are subrecipients in every state who fit that bill, I guarantee it. If it's an expense that's incurred by your peers, I'd be pretty willing to stake my reputation on the fact that it is reasonable and necessary as an expense. If I'm conducting sound business practices, i.e. I'm not getting all my auto parts for my cousin Billy's Napa shop down the street, if it's consistent with market prices that I can substantiate to those folks in Atlanta that this price is reasonable because here's cutouts from websites and newspaper advertisements for the exact same product or good. If I've used my standard procurement practices in acquiring that good, there is a recognition that the marketplace dictates what the reasonable and necessary price of a good is if we use standardized procurement practices. I'll pass all of these tests, and GDOT shouldn't be giving me a hard time. I've tried to take the OMB definitions and put a little transit spin here. if it's directly related to admin operations or maintenance of public transit, if it's consistent with a definition and a standardized transportation chart of accounts. How many of you in this room work for an organization that was created specifically to do nothing but transit operations? There are no hands raised, and I didn't expect to see any hand raised. Most of us work at either local governments or nonprofit organizations that were established for some other purpose. Transit was an afterthought. As a result, the chart of accounts, the accounting systems that we use, were built for some other purpose than public transportation. We'll talk about the importance of the chart of accounts a little later on. But if I had to look at what accounts I should have in the accounting system, is there, to your knowledge, any place that I could go and find a standardized transit chart of accounts? Does anybody know? I'm not even getting any head nods on this one.
They should know with the new reimbursement form, the USOA county departments.
Oh. Does everybody hear that? Has everybody seen this reimbursement form? There are specific categories on that Excel spreadsheet
Somebody said unfortunately.
that has numbers on it. Years ago, Congress, which picked on FTA a lot, decided that FTA did not exercise sufficient control over its urbanized area recipients and mandated a national reporting system. It was originally called Project FAIR, also known as Section 15, which you may have heard of today as NTD, or National Transit Database. Within the National Transit Database, for larger urban areas, or what we call full reporters, you must report costs, regardless of what your native chart of accounts is. In the chart of accounts that's dictated is something known as the USOA, or Uniform System of Accounts. And there's a definition for every object of expenditure and revenue, asset or liability within the USOA. And if GDOT was giving me a hard time on a cost that I thought was reasonable and necessary, one of the first things I do is go to the account definitions in the USOA, and if I saw my item in that definition, I'd bang out an email to GDOT and go, and send that, with urgency to GDOT. That's another method if you're unsure of whether or not a cost is reasonable and necessary. Another lesson. How many of you have heard the old grants management adage that it's easier to get forgiveness than it is permission? I see some smiles, and some of you have heard that phrase. It's never been true. If the accounting clerk, one, is unsure what bucket to drop it into, tell them not to make their own decision. Escalate the issue to a manager and get two heads looking at the issue. And if you guys cannot come up using the guidance provided here with an explanation that you're confident of, write GDOT an email. Is this an eligible cost under the 5310 or 5311 program? Then keep that email, because during an audit it could come up again and GDOT could disavow the email. This FTA is famous for doing this. They'll tell you something's okay in an email, and then when you dig in the triennial review, FTA says we never sent the email, or we can't find the email, or some explanation that leaves you on the hook. But particularly with respect to your auditors who may be questioning these costs. Keep that email and show the auditor if he's questioning that cost at audit. Don't just assume if you're unsure. A cost is allocable. It's also part of the reasonable and necessary. Sometimes we incur costs in our organization that benefit transit and other business activities of our organization. We pay the utility bill. Transit's housed in a building that utility serves. Transit should pay its pro rata share of those utilities. The method by which you assign a portion of that utility bill to transit is based on an allocation process. And that allocable procedure is subject to approval by the grantor agency if it's not already documented in what's known as an indirect cost allocation plan. That's what we mean by allocable. There is additional guidance in the super circular about specific items of cost. And for those of us who enjoy a glass of wine every now and then, you'll lament that there is a specific paragraph in the super circular that says alcohol is not an eligible cost under federal grant awards. And there's a whole alphabetical listing from soup to nuts that will say this is allowable, this is unallowable, or this is allowable provided it meets the following conditions. Anybody who manages $1 in federal grant awards has to know these rules. You can't effectively manage the grant without knowing what has to go in the allowable bucket and in the unallowable bucket. You can't do it. So one of the things that I'll sneakily do in a compliance review is I won't ask the executive director who may have participated in this session. I'll go ask a mid-level finance person if they know what the super circular is or whether they know what 2 CFR Part 200 is. And if they look like I'm talking French to them, I know I'm in trouble in that compliance review. And I'm going to look a little deeper in the area of cost allowability. Because they're making their own calls, they're not following federal guidance. And that's just one of the red flags that's in there. This session will primarily address the super circular, a little bit of FTA practices, but it's even deeper than that. And it makes your job all that much harder because you not only have to know one layer of bureaucracy and their rules, O&B rules, you've got to know multiple layers. I had one state program manager call this the inverse cost allowability pyramid. So take a pyramid, flip it upside down. And it might look like this. So at the very top level, we'll have that O&B guidance that you can find at 2 CFR Part 200, Dot 420 through Dot 475. But we have to know more. We've got to go to what FTA may limit, because Congress may have stipulated some limitations on particular programs. Where do we find the rules for FTA? I'll give you a clue. Some of you have already volunteered this information in response to an earlier question. Eventually, but I'm looking for a different answer. FTA publishes its cost allowability standards in the form of program circulars. So if you wanted to know what you could charge and charge, not charge to an FTA grant award, and they've standardized the process, so you could go to Chapter 3 of every circular and find the answer. And it will generally tell you what's allowable, what's unallowable. And it'll always be in Chapter 3 of 9041G, 9071G, 9030, whatever they're up to in the urban program. It's not G yet.
I was just gonna say 5010.
5010 doesn't discuss cost allowability of specific programs. 5010 is a circular, that really is the super circular of FTA circulars. It's the award management guidelines. It basically spells out the processes that FTA will use in its management of 5310, 5311, 5307. And FTA will always say if there's a question that you have you cannot find in a program circular, go look at 5010. All these circulars are available for download at the FTA website. Look under general squares that say laws and guidance, and the circulars will all be listed there. Then, GDOT may impose some limitations. Do you fund project administration at the 80% non-operating level? My successor at North Carolina DOT had something against two-way communication. He just didn't want to pay for radios. So radios, allowable as a capital expense under O&B guidance, allowable as a capital expense under FTA guidance, was not an allowable expense under NCDOT guidance. And he put that in the state management plan. Thankfully, his successor has removed that prohibition. But it just goes to show that FTA gives GDOT the 5311 program and says, here, you manage it in the manner you see best fit to suit the needs of rural transit operators in Georgia. And they may limit the allowability of certain items. To find out what they might limit, you would look for the state management plan for the 5311 program for the state of Georgia. And they prepare one, it's probably available on the GDOT website. And then finally, your own transit agency may set its own limitations. It's not uncommon for me to look at the travel policy of a local 5311 system, and even though the IRS, GSA, FTA, or a state DOT will pay 54.5 cents mileage reimbursement, if I'm this one particular agency in Indiana, my board's only going to allow me to claim 35 cents a mile. And so that's a locally imposed standard. And for me to do my job as accounting clerk, grants management custodian, I've got to know O&B, FTA, state, and local policies. I've got to know them all. So it's a little more complex than it first seems. But at the top level, we've got to know this O&B guidance. Any comments about allowability? A couple other things to be aware of. There's a fundamental formula for determining the allowability of costs under any federal grant awards. The allowable amount is the direct cost plus the allocable, there's that word again, allocable portion of indirect cost minus rebates and credits. So Frau Match has sold us a scheduling and dispatching system. They want us to go out and buy Samsung tablets so the software can communicate on board our revenue vehicles. And they want to sell the Samsung tablets at $1,000 a piece. And you know, I can get them for $600 a piece down the road. You go buy the Samsung tablets, and you happen to walk into the local Best Buy or computer shop, and that particular day, Samsung's even new and better, $75 manufacturing rebate. You end up paying $5.25 for that tablet with a mail-in rebate of $75, the amount that you can bill GDOT is $525, not the original $600, because you've got to factor in applicable credits. So if you're getting any rebates for prompt pay, rebates because of manufacturer promotions, or in my own home state, nonprofit organizations that provide day employment for individuals with disabilities, shelter employment facilities, are exempt from state fuel tax. So when I gas up the 5310 vehicle that's used to transport my client's shelter workshop facility, I may pay whatever's the pump, $239 or whatever it is today. That's not what I can bill NCDOT if they're paying for my operating expenses. I have to factor out the state gas tax that I'm going to get rebated when I file my claim every quarter with the NC Department of Revenue. And so NCDOT considers that a rebate or a claim, and they will not let any of those nonprofits bill the state gas tax because they consider that to be in this rebate or credit category. I don't know if we have anything similar to that in Georgia. Many states have some special provisions for tax rebates that you pay and then get reimbursed for later. And the role of the state DOT is almost usually not to reimburse you at all for those rebates to start with. We need to be aware of those types of conditions. Consistent treatment of all costs. If the same cost item is being submitted and shared across 2 or more grant programs, we have to basically treat that cost consistently. So in other words, salary of an executive director, one of my Wall of Shame members, his salary was actually $75,000. That's what was in his paycheck. He billed a salary of $275,000 to his FTA grant. He is in jail. He failed to accord cost-consistent treatment. He's also debarred and lost all his contracts. You can't have a set of rules and regulations how you handle GDOT money. It's different than the other federal grants or the way you conduct general agency business. We want one set of business policies. I'm giving you some chapter and verse up there that's more appropriate to the home game here of the super circular. Generally accounting principles, you have to do that. You have to, if you've ever read the letter you get from the auditor, if you're really bored, read them sometimes. They all read about the same, but they'll indicate whether or not you have complied with generally accepted accounting principles. You can't double dip. Does everyone understand that provision? That seemingly makes common sense for a federal regulation. And that is why GDOT is so particular about trying to identify the source of local match in your grant applications. It's not good enough that you promise to come up with 10K local match to this year's grant. They want to know where the 10K comes from. And every state DOT in the country does that. So don't think GDOT's picking on you. And even if, GDOT tells you, we're going to give you $100,000 this year, we're going to give you $100,000 this year, and then when the contract comes in the mail, it's only $90,000. You can't double dip to offset losses from one grant program to another. Now, we in transit, are you just scratching your eye or are you raising your hand?
I'm scratching my eye, sorry.
Didn't know you had a question there. I didn't want to overlook
I
you.
appreciate that.
We in transit can double dip. There's a very unique set of circumstances that permit us to double dip. For a little history legislation is back in the day. Here's a little rural transit trivia for you. Everybody knows that GDOT administers the program, and then GDOT reports to FTA, right? FTA didn't always manage the 5311 program. For 10 bonus points, what branch, what agency of the federal government managed the 5311 program for 5 years before FTA? Does anybody know?
DHS.
HHS, I heard a guess. Public safety, that's a guess. Any other? That's all wrong. It was the Federal Highway Administration. How many of you have a copy of 9040 on your shelf somewhere? How thick is it? About 150 pages of text plus appendices. Get this. The rule book for 5311 for the first 5 years, 5 pages. During the period when Congress was deliberating extending the demonstration program, known as the 147 demonstration program, that had been managed by FHWA. And FHWA funded bridges and roads, and when they funded people, they funded planners. And so everything was funded at 80%, because that was the ratio FHWA funded planning. And so when transit was apparently coming down the congressional pike, Congress had to decide whether or not they would manage the rural program and fund rural operations at 80%, like FHWA, or would they fund it at 50%, like that small group at what was then UMTA, the Urban Mass Transportation Administration. And USDOT did this dog and pony show, went around to some states, and I'm old enough that I was at one of the tables at one of those meetings, and we argued that most rural counties don't have the same revenue generation capability of an Atlanta or a Charlotte or a Raleigh, and that therefore FTA or whoever the Secretary of DOT ultimately decided to run the program ought to cut rural systems some slack and maybe fund operations at 50%. And that was the position we took. FTA eventually, or US DOT eventually decided that they're going to give the program to FHWA, but they're going to borrow the 50% operating rule from existing urbanized area practice. But in order to soften the blow, because we were so vehement in those lobbying efforts, that they would help out with the local match, and that they would ask Congress to pass a law that would kill two birds with one stone. Back in the 70s, we in North Carolina were very pro-coordination, and we had just a month before passage of the 5311 legislation and had Governor Hunt sign an executive order mandating coordination of transit services among HHS and DOT agencies. And we had promoted this to be an integral fact of the 5311 program, which ultimately it was. And if you coordinated, i.e. you provided service under contract to a human service agency, what Congress allowed us to do was to use that contract revenue as match, even if that buyer was using federal funds to pay us. We could double dip. We could use federal funds to match federal funds. That's the history of that provision. And there was a cap on it. They didn't want us to go wild. Up to 1/2 local match could come from these contract revenues. And that one was in place from 79 to 89. Then there's a senator who's still in the Senate today, Patrick Leahy from Vermont, said, I've got problems in Vermont even meeting half the local match requirement in cash. I'm going to sponsor legislation that would move the cap. And so now, In 5311, effective 1989, all of the local match to 5311 could come from the provision, revenues derived from the provision of service under contract from a state or local, public or private human service agency. You could take that revenue and instead of counting it as fares, you could put it in the bank and use it as local match. That violates the super circular. And I've been hit up via email 100 times over the last 30 years saying, Rich, I heard in the workshop we can use contract revenue as local match, and I tried to get this through our city finance officer, and he told me I was full of baloney, you can't use federal funds to match federal funds. And I had to send a statute that permits this. That was the case in 5311 only until 2005. And then with Safety Blue, which was the Reauthorization Act in 2005, Congress said, we'll let all FTA programs do this. So the Urbanized Formula Program can do this effective 2005, 5310 can do this, and then 5311 has always been able to do this. Specific congressional authority, which supersedes anything you read in the super circular. Any questions about that?
Well, isn't there a caveat on that you can't match FTA funds with FTA?
Yes, in the execution of this over the years, FDA has expanded and sometimes retracted the length of additional rules within the program. One of the things that they have always said is that we will not let you match FTA dollars with other FTA dollars. So when FTA first started expanding the allowable purposes of 5310, which for decades was a capital-only program, so that you could enter into purchase of service agreements with 5310 money, FTA decided that you could not use FTA money to match other FTA money. 5310 cannot be used to match 5311 and vice versa. So there are some caveats on this. But if it were not for this provision, with the exceptions of Gatlinburg and Pigeon Forge, there'd be no rural public transit in the state of Tennessee. Every one of their other 9 providers would go out of business immediately if this were not an allowable provision of 5311. This is important in any state, in particular where there is not a lot of state dollars going into rural transit. Now, if you have a state like Illinois, it gets about $25 million in 5311 money. They have $400 million in state money. No one needs contract revenue as local match. They can use their state dollars as local match. But if you're a state like Arizona that has no state dollars in public transit at all, this matching provision becomes very critical for the sustainability of rural transit operations.
Richard, you could talk about program income later.
Yes. Now, so there's a note down there that basically gets at the question that was brought up a moment ago. 5310 can't match 5311. The general language that FTA uses is dot funds can't be used to match other dot funds. But there are exceptions to that rule as well. There is one federal aid highway program that can be used as match. And there are, I'm told, elsewhere in the grants landscape, certain other federal programs that are designed to incubate development and foster investment and the like that will permit their funds to be used as match to other federal funds. FTA doesn't want to take the time to do the research to identify those programs for you, and as a general rule, we'll read in FTA guidance that the burden is on your shoulders to determine whether or not something can be used as local match. In the early days of the program, FTA published a list of other federal programs that were categorically allowable to be used as match. They no longer do that. So if I'm in your shoes and I'm using contract revenues as match, even if the source of those contract revenues is another federal program, I could be at a little bit of a risk. One of the bits of advice that I give is there's 2 steps you can take if you're getting a lot of negative kickback on the concept of using the revenue as match. Number 1, have the organization that's buying service from you go to the FTA charter website. And you're going to say to yourselves, what in the world does a charter have to do with this? And it doesn't. But there is a charter exception, a little itty-bitty exception that no one uses. But it's out there. And it basically creates an FTA registration of what is known as a Qualified Human Service Organization, or QHSO. And if an entity holds FTA certification as a QHSO, there's not an auditor in the country that would have the nerve to question your use of that revenue as match. Perhaps not as powerful a weapon to argue against someone giving you a hard time on local match is the General Accountability Office, or GAO. Periodically, they publish studies. They get a lot of press. The most recent one of note was in 2002, where they list all the federal programs that support the transport of passengers as an eligible program expense. And when I sign a contract, if I'm a manager, and someone wants to buy service from my contract, or enter into a contract with me to buy service, I'm going to ask them, what are you using to pay me? And they may say Medicaid, they may say Title III-B of the Older Americans Act. I'm going to take that answer and I'm going to compare it to the list of programs that's in the 2002 GAO report on transit disadvantaged populations. And if my revenue source is in the table in the back of that report, I'm going to hold it up to my state dot, I'm going to hold it up to the auditor, I'm going to hold it up to whomever's questioning me and say, here, they allow passenger transport, I'm using it as local match. GAO has listed it, I'm using it, and no one should give you a hard time. So that's how you violate Grantsmanship 101. And every finance officer worth of salt should tell you you're nuts if you're proposing to use other federal monies as match. And there's your defense, there's your argument, that's how you build a business case for allowability. Over the years, the relevant citation in the end of Chapter 3 about this has become less useful. FTA thinks it's a matter of routine now, they don't have to elaborate. Older versions of 9040 contain a better explanation on the use and allowability of this. So don't be afraid to Google search the web for older versions to get more guidance. So any questions on this? How many of you use contract revenue to meet the local matching share of your 5310, 5311 grants? You do, you do. Wow. Only a handful. It is allowable. There's no shame in it. You do it. Some of you just don't want to answer. FTA programs are all cost reimbursement. You've got to incur the expense, then bill it. You have to pay for it, then bill it. We don't make advance payments. For certain big ticket items, that can be problematic. And remember the seventh commandment, all costs must be adequately documented. What in the world does OMB mean when they want a cost to be adequately documented? What constitutes adequate documentation? You're the auditor. What would you look for if she was telling you I spent $258 on flowers? Invoices, canceled checks, vendor receipts, contracts. It's all kinds of things that constitute adequate documentation. And the super circular isn't very informative about this. That's about all it says. With the exception of personnel, it goes into much greater depth. There is an old financial management manual that was published in 2004, 2006. I think it might be the more accurate date. That had a table in the appendix that listed by uniform system of accounts each object of expenditure and what would be normal documentation requirements for each type of item that a transit system might incur costs under. That gives you the whole list. That list has been updated and will be in a new RTAP financial management manual that's coming out in 2019. And if you give me your email, I can give you the documentation